Welcome to A1 Tax Filer. In this video, I'm going to break down exactly what records you need for MTD for income tax, what you do not need to track digitally, and where people usually make this more complicated than it needs to be. Let's keep it simple. Under MTD for income tax, HMRC expects affected sole traders and landlords to keep digital records of their self-employment and property income and expenses using compatible software. Those records are what support the quarterly updates you send during the year. And those quarterly updates are not your final tax return. That is the first thing to understand. MTD is not just a filing change, it is a record-keeping change. If you are a sole trader, you need digital records of your business income. That includes things like sales, takings, and fees. You also need digital records of your business expenses. That includes things like stock costs, travel, office costs, and financial costs. If you are a landlord, you need digital records of your property income and your property expenses. That includes rent coming in and costs like repairs, maintenance, or related services. And for each record, HMRC says you need three things: the amount, the date, and the category. That is the basic rule: amount, date, category. This is where a lot of people waste time. They assume MTD means putting every part of their financial life into one digital system. That is not what HMRC is asking for. For MTD record-keeping purposes, the digital record requirement is focused on self-employment income and expenses and property income and expenses. Other income, like pensions, dividends, partnership profit share, or savings, does not need to be kept as digital records for MTD in the same way. But those income sources still need to be reported when you complete your tax return in compatible software. That distinction matters, because a lot of people make this harder than it needs to be before they have even started. This is where the detail starts to matter. If you run more than one sole trader business, you need separate digital records for each one. And you need separate quarterly updates for each source of self-employment income. Now compare that with UK property. If you own one UK rental property, or several, HMRC treats them as one UK property business. So you do not need a separate record set for every single UK property. Your software combines them into one quarterly update. Foreign property works differently. If you have foreign property income, you need separate digital records for each individual foreign property, even though the software will still combine those into one foreign property business update. This is one of those areas where guessing is a bad strategy, because the setup rule changes depending on the type of income source. This part catches people out too. HMRC says you do not need to keep digital records for expenses that are not for business use. And if you are sure you will use simplified expenses, you do not need digital records of the actual underlying costs. But here is the practical advice. If you are not fully sure how an expense will be treated, keep better records now, not weaker ones, because trying to rebuild expense history later is exactly where avoidable mistakes start. Let's say you are self-employed, but you also receive dividends, a pension, or partnership income. That does not suddenly mean all of that becomes part of the MTD digital record-keeping requirement. It still needs to go into your final tax return through compatible software. But it is not the same as saying you need to maintain full MTD digital records for every one of those income sources. Some people may still choose to record them digitally for a clearer year-round tax picture. But that is a choice, not the core MTD record-keeping rule. So again, MTD is not asking you to digitize everything equally. It is asking you to digitize the self-employment and property records that fall within the rule. If MTD is likely to apply to you, here is where to start. First, work out what type of income you actually have: self-employment, UK property, foreign property, or a mix. Second, separate what needs digital records from what only needs to be reported later on the final tax return. Third, make sure your system captures the 3 things HMRC expects for each relevant record: amount, date, and category. And fourth, stop treating this like a problem you can solve once a year. Because MTD record keeping is not really a deadline issue, it is a workflow issue. And the earlier you fix that workflow, the easier everything becomes later. If you found this useful, subscribe to A1 Tax Filer. In the next video, we'll break down how quarterly updates actually work under MTD for income tax, because that is the next point where a lot of people get confused. And if your records are still spread across old spreadsheets, notes, and receipts, fix that now. Because once MTD applies to you, poor record keeping stops being inconvenient and starts becoming a real compliance risk.